Good morning, everyone, and welcome to session 5 of the AfCFTA Go Global webinar series, Cohort 1. For those who have not been following the series, the AfCFTA Go Global webinar series is designed to equip Nigerian startups and digital enterprises with the regulatory clarity, the market intelligence, and strategic framework required to successfully scale across African markets under the African Continental Free Trade Area. As we progress through this 6-session journey, Section 5 moves us from strategy to execution, focusing on practical and actionable pathways for financing, expansion, and building scalable models for cross-border growth across the continent. Now, before we get started, I would like to take a moment to acknowledge the organizations supporting this initiative. The webinar is powered by our partners, eTransact PLC, Chams Holding Company, Swift Fusion, and of course, NITA. Now, we appreciate their continued commitment to strengthening African digital economy and supporting platforms like this that bring together founders, investors, ecosystem leaders across the continent. Now, across Africa today, we're seeing incredible innovations and entrepreneurial activity. But as many founders quickly discover, building a great company in one market is one challenging effort. Now, scaling it across multiple African markets is another challenging effort entirely. Now, what exactly and why are we having a conversation like this? Now, under the AfCFTA, we now have a historic opportunity to build businesses that are not just national champions, but continental players. But scaling across Africa requires 3 key things: the right capital structure, the right partnership, and the right market access strategy. So today's session is designed to bring those perspectives together. We have an exceptional lineup of speakers who bring investment insights, ecosystem connections, real operational experience from scaling a high-power fintech across African markets. Now, before we begin, just a quick note on participation. After each speaker presentation, we'll have about 10 to 15 minutes of questions and answers. If you have any question, please drop them in the Slido link shared in the Teams chat on here or in the attendee WhatsApp group. Our team will be monitoring both channels and bring your question into discussion. So please, keep the question coming as we go along. Now, to start off today, we'll begin with a perspective that is absolutely critical for founders looking to scale across African markets: global ecosystem access and strategic partnership. Our first speaker, Oyinkan Bello, the country director of the UK Nigeria Tech Hub. Oyinkan works at the intersection of technology ecosystems, global innovation networks, and startup growth. She helps connect African founders to international markets and the UK market precisely, strategic partnerships and development finance institutions. Now, as African startups expand, this global connection often play a major role in unlocking capital, market access, and institutional partnerships that enable long-term scale. In a session today, Oyinkan will share insights on how founders can plug into global ecosystem, leverage strategic partnership to scale African digital businesses. Oyinkan, it's a pleasure to have you with us today. The floor is yours.
Good morning, everyone. It's so great to be here. A big thank you to Shea and the team for inviting me to sort of share some of the stuff that I know and some of the stuff that we are sort of doing at the Tech Hub. So I mean, I know that this series has been going on for a while. So I'm expecting that everyone here is sort of like an expert or has like a startup that they're sort of looking to scale. Please kind of just let me know when you can see my slides so then I can start from the beginning properly.
Yes, we can see your slides.
So this is a market access clinic and we're looking at scaling across the African markets. So just a bit of background, the UK Nigeria Tech Hub is part of the Digital Access Program. The Digital Access Program is funded by the Foreign Commonwealth Development Office, which is the Foreign Office, a part of the UK government. We are part of an international network. So there are tech hubs in Nigeria, Kenya, South Africa, Brazil, and Indonesia. And all the tech hubs sort of work in the same context. We're really looking at how do we scale the markets that we're in? How do we grow startups? How do we ensure that the businesses that are coming from these ecosystems are sort of world class and can compete on a global scale? Secondly, how do we really connect these markets to the UK market? There's a lot of advantages of the UK market, and we want to see how we can sort of support ourselves for mutual growth and mutual benefit. So that is some of the background of Tech Hub. And because we sort of work internationally, we always have, we were talking to our colleagues in Brazil, Indonesia, Kenya, South Africa, and we always have these insights on what's going on in these markets. And it's sort of those insights that I'm going to bring and share today. I want it to be really interactive, so please ask me questions at the end, and I'm happy to answer questions. So what I'll do is I'll try and go through the presentation really quickly and leave more time for question and answer, because that's sort of what is most important, right? So there are a couple of objectives that the team sort of wanted me to touch. So we're really going to talk about like the different ecosystems. We're going to talk about like operations in those ecosystems, and we're going to talk about sort of some market applications. So I have two case studies that I'm going to talk about. So yeah, just let's move on. So I think generally scaling across African markets, it's a very interesting time in the ecosystem. Like in general, the African startup ecosystem is maturing. There's a lot of shift towards like really strong governance and integration and sort of being in multiple markets. When I speak to investors or VCs or HNIs or family offices, I think they kind of want to see that there's a potential for the product to scale past the borders of Nigeria. The anchor markets that we're seeing are, traditionally Kenya, Nigeria, and South Africa, but there's also Egypt, there's also Ghana. There's also a lot of stuff happening in Uganda and Tanzania as well. So I think that like we're going to see a lot of shifts, a lot of change. Like there's a lot of capital going into markets that it wasn't really going into before. And I think what's really important is like ecosystem intelligence on each of these markets. It's really important that, as a founder, you might not be ready to scale now, but it's important that you're already gathering the ecosystem intelligence before you are ready, so that you kind of already have a picture of, okay, these are markets that are really interesting for my product. So just to sort of do a bit of sorry, I'm trying to go to the next slide, but okay. Yeah. So a bit of the landscape and what it looks like now. So in 2025, the continent raised 3.2 billion USD, small number, but it's 40% up from where we were in 2024. So, I mean, there are different theories. People are saying, oh, the funding winter is over, but I think it's still a bit too early for us to tell. But then again, this 3.2 billion it also really depends on who you're speaking to. I think some people say it's 3.6, some people say it's 4.2. I think for me, I'd rather pick the low end of the spectrum, so that, it's better to be pessimistic than to be overly optimistic. But I think what is more interesting for Nigeria is that we're seeing more debt capital coming to the market. So most of the capital coming into Nigeria is debt, which means that people want you to repay. It's not like, equity is reducing, and grant funding is reducing in general. I think fintech is still definitely leading, is definitely leading in getting investment, but then there are other sort of verticals as well. Like we're seeing a lot of stuff happening in logistics, climate tech as well, and other interesting areas that people weren't even looking at before. I think the role of DFIs are changing. Um, in the past, there was a lot of emphasis towards how can we sort of support um, sort of the bottom pyramid, right? But then I think there's a change towards you sort of need the middle players to grow and scale, so that they in turn can then support sort of the bottom layer of the pyramid, right? So there's a bit of a shift in development financing towards that. But in general, I think the DFIs obviously like they de-risk markets, they influence sectors and they also provide a lot of insights. I think that people forget that a lot of DFIs have a lot of data and they can provide a lot of insights. Investors are really expecting better unit economics. I think gone are the days where people were raising on just an idea. The ecosystem is changing a lot. They really want you to, I mean, if you're pre-seed or they want you to like have customers that are actually paying for your product. And again, it's so interesting. Like we see like these big raises, right? And there's still some money at pre-seed seed level, but there's Series A is still not as much funding there. But then we are our repayments, because when you take money from investors, they expect a return, right? And so our return window is it's growing. So the amount of capital we're expected to return at the end of like the cycle is growing, right? So the market is a very interesting space. And I think there are definitely conversations around how do we start thinking about liquidity and how do we start thinking about exits, and that's really important. So whether that's a secondary exit or an IPO or whatever that is, there's a lot of conversation around that at the moment. So sort of just onto like the crux of why we're here. I think I'm going to do two deep dives, Kenya and South Africa, because obviously the startups that I'm talking to are in Nigeria, right? So definitely Kenya is a top market. There's a lot of funding that's really going to large scale clean energy. There's a lot of funding going to infrastructure. There's a lot of funding going to fintech, right? And financing is a big thing. I was in Nairobi a couple of weeks ago, and there's a lot of startups talking about like financing, and that's what that is, financing supply chain, or financing market expansion into like another region. So there's a lot of stuff that is happening in that market. But what I will say is that if you're thinking about scaling into Kenya, there's a couple of things that you have to think about, right? Um, sorry, just trying to get to my next slide. I think my internet is a bit slow. Okay, great. If you're trying to go into Kenya, I think there's a couple of ways in which you can think about it. You can think about it from like a joint venture perspective. You can think about it as just, I think something that is quite light touch and that I think people should consider is just a basic partnership, right? I think that it's quick, right? And for example, if you want to sort of if you're a fintech and you want to establish in Nairobi, it can take you like about 8 months to get approval from CBN in Kenya. And honestly, you're not trying to wait 8 months for an expansion. So I think leveraging existing rails is very, very important, because I know like a joint venture is a different thing, right? But I think a low hanging fruit is like just those quick partnerships. Who has existing infrastructure that you can sort of piggyback off. But again, it has to be sort of something that is mutually beneficial. It's not something that, and I think that's something that I see in that people want to do partnerships, but it's not beneficial to both entities. Both entities have to be making money from it for it to be like a proper partnership and for it to be, low, no, not low effort, but for it to be something that actually makes sense. Mergers and acquisitions, if you have the money, that would be good. We're seeing a lot of Nigerian startups acquiring Kenyan startups. But I think these are sort of the general market entry strategies that I would think about. I would not advise that you go into Kenya and you start hiring and you like have an office and all that stuff. I think you need to really study the markets and really understand the nuances. And that's something that I will sort of come to a bit later in the presentation. South Africa, very mature startup ecosystem. It's a very interesting ecosystem because the the top and the bottom, there's such a wide disparity, and the way in which you market products to both is very different. They're very high barriers to entry because they have very, very strict regulation. And where we're really seeing a lot of opportunity is in like energy and infrastructure and definitely like fintech as well. However, South Africa is often seen as the gateway for Africa expansion because it almost because it's such a mature market. It's like if you can break into the South African market, then your product is definitely doing well, or you have a good product. But that's not necessarily true because we have a lot of businesses that are doing well that are not in the South African market. A lot of Nigerian businesses that have expanded and are not in South Africa, but that is just something that I've seen, and some of the things that people or investors sort of look at, like, oh, if you're in South Africa, then there must be something special. You must have some secret sauce. But again, as I said, it's not always true. But it is perception, right? So similar to sort of Kenya, I think like a partnership model is sort of the easiest way to scale in, but you can do the other stuff as well. You can do like the merger and acquisition. You can do sort of just exporting digital service, so just like serving that market, right, from Nigeria, but not being in market. I think there are definite complexities with that. Because again, like so for example, like a Claude is an international company, right? And so they don't have to have a presence in South Africa or a presence in Nigeria to operate, but not all services can scale like that, right? And comparing like a very well-known product like maybe a Claude or an Open AI to like a product that is very local to the Nigerian markets is different. So there's definitely different ways in which you can approach it, but I would always say go with like the lowest hanging fruit, which for me is always partnership. And then when that works, you can then think about whether it's going to be a merger and acquisition, or you're going to create like a separate entity to do like a joint venture. So I think that was kind of just wanted to give like a very brief overview of some of the two markets and like the things that we're seeing and how they're different. But again, there are definitely different routes to scaling in Pan Africa. I talked about like the low capital entry strategies. For me, it's really partnership. You can always start with like the digital exports model that I kind of spoke about, but that way it's probably like you're pushing your products digitally, maybe with digital ads. But then there's limitations with that because there's something being in country really helps you with, right? And it really helps you to sort of feel the pulse of the people on the ground and how they would use your product. I think something that I really want people to think about really early is governance, compliance, and finance. I think that those are the make or breaks when you're trying to scale into a new market. You really need to make sure that you do not fall foul of the regulator and you understand all the compliance requirements. And this is not just the legal compliance, right? There's stuff around like what can you do, like marketing, what kind of marketing can you and can't you do? What can you say and what can't you say? Those are also like sort of things that people don't really think about. What the labor laws are, if you can you hire and fire fast? Are they very litigious in general? Because people think that, I mean, not people, but Africa is not one market, right? It's seen as one market by people that don't understand what they're doing, right? But every country has its own nuance, and I think it's really important that when you're thinking about institutional readiness, you think about all those little nuances. And I think the last thing I really want to talk about, and something that I can speak a lot about, is sort of ecosystem leverage. There are a lot of countries that have like accelerators that people don't consider joining because I know that everyone is tired of doing like accelerator programs, but they really help with sort of building like founder networks in those countries. But also, I think building relationships with DFIs are very important because they have the data. They've done all sorts of programs in different countries, in local governments, in places that you can't reach and your capital can't reach, right? But a lot of DFIs produce reports, they share, they have info sessions. No one attends these because people think that, oh, it's just for development people, but it's not, because there's a lot of data that is gathered there that people don't have, that are not accessing, right? And so that's something that I would really want people to really rethink about how because a lot of times when people approach DFIs, they approach and say they want money, right? And that's not something that DFIs can often give to every single person. But then they can give you information, they can give you the reports, they can also leverage their relationships to support you. And so, for example, if someone approached the UK Nigerian Tech Hub and said, "Oh, I'm going to London and I want to have a couple of meetings. Do you know a cheap space that I can have my meetings at?" You don't know, we might have a partnership with someone in the UK and we can recommend you, and that is something cheaper. Like, it's not free. Like, you're not going to get the space for free, but you're going to get it at a reduced rate, right? And so those are the kind of things that I'm talking about. Or you never know, we might know someone that is doing another example, right? You want to scale into maybe the UK and you you don't have all the money that you need for like legal, right? We might know someone that would take your brief on, not for free, but maybe at a reduced rate, because firms sometimes have these programs where they do things for low bono, so not pro bono, but low bono. But if you don't speak to us, we don't know, right? And that's just an example. I'm not saying that I have like a list of law firms that are doing that, but that's just an example of how like organizations can help you in a non-cash way. Right. And it's similar. For example, I have colleagues in Kenya and South Africa. They definitely can point you in the right direction. And all you basically need is an introduction from me. So I think those are the things that I really want people to think about and leverage more. We have sort of a report that I can share after this. We did it in 2024, so some of the information might be a bit old, but we literally looked at like a checklist. So if you were thinking about scaling into South Africa, Kenya, and Nigeria, sorry, that's the last country. We did like basically like a document for any founder, and these are things you have to think about. These are the cultural nuances in place. These are some of the top groups, some of the top accelerators, and that is information that we can readily share. And it's and I'm sure there are other. If you speak to like GIZ or if you speak to World Bank, they have all these kind of reports and studies that they've done. So that's something that I would say that more founders need to sort of think about and develop relationships so they can have access to this material. Anyway, I feel like I've belaboured the point. So yes. I just wanted to just do like a quick case study of some of the things that we've seen when it comes to like scaling into new markets. So Solaris, it's a Kenyan energy company, and they really scaled into South Africa at a very opportune time, I think around 2022. I want to say 2022 or 2021, right before the energy crisis. And what they really did was that they really partnered with like engineering firms and like developers. And what they did was then they didn't use those networks to scale, right? So after sort of proving demand with those like partnerships, they then scaled fully into the market. And that's kind of what helped them capture market. But it was through these partnerships with these various engineering firms and various like developers in the space. And I think for me, what I just kind of wanted to showcase was that people are doing it, right? It has to be mutually beneficial, right? Obviously, there's some form of like profit sharing or whatever that I obviously I'm not privy to. But it works for both parties. And even if later on you spin off and do your own thing, or they spin off and do their own thing, for that period, both of you have sort of reduced your risk and liability. I'm just trying to go to the next slide. Okay. Another sort of case that I want to give is Rayness. So Rayness, everyone knows Rayness is a Nigerian company. But they scaled into Kenya, and what they did was that they kind of partnered with Cellant to sort of accelerate entry. So they were not like trying to get their own license. They just partnered of someone else's license. And that means they didn't have to like go through all the regulatory barriers and stuff. And something I also saw about with Rayness is that they really funded a lot of like ecosystem events, and that really gave them a lot of publicity, right, in the market. So I think that's also something that people have to think about, in that what strategic events can I partner with that will really give me visibility in the ecosystem that I'm sort of targeting. So yeah, I think I kind of said what I wanted to say in this slide. I think I've said it throughout. I think that for me, partnerships are like the lowest common hanging fruit. Like, you need to just leverage who you know in DFIs, leverage accelerator contacts, join some accelerators, look for corporates that you can partner with, or even startups as well that are doing something similar or that have services that you can sort of latch on to. I mean, you're not going to latch on to someone that's a direct competitor, right? But you can sort of work with someone that has services that are adjacent to yours, are very complementary. I think, again, if you're trying to test out multiple markets, then the partnerships ways to go. I think the AfCFTA Secretariat is doing a lot, and even ONDI is doing a lot around like cross-border trade. And I think that's where people need to really align and think about where can I plug in that is low cost and low friction. Yes, and I just kind of want to just quickly talk about like execution and sequencing. If when you're thinking about a new market, I think pilot is one anchor market. Um, I mean, except you have like a lot of money, you can't just pray and pray, right? So pilot is one anchor market. But even before that, I think that in founder communities that or even operator communities, people talk about like sharing information. Companies don't just scale into a market as a company. There are people behind that, right? So there are people in these organizations that you can ask for advice or ask for help. Or there are people that have done it before and it hasn't really worked, right? And so you can always ask them, okay, what was it that worked for you that you sort of want me to think about, etc., etc., etc. Once you've gone in and decided you need to really localize teams very early, I think that there's something about local teams. Yes, you're a Nigerian company and you want to go into a market, but you really need that local anchor to not provide I don't want to say provide acceptability, no, but like to help you with local context. Blended finance, I think I've spoken about that. There's a lot of debts in the market now. I think people should start thinking about that as opposed to only trying to raise, right? But then your fundamentals have to be good and your unit economics have to be good. Finally, storytelling. I think people forget about this. Like some of the trends I'm seeing is that no one wants to back a bad storyteller. So if you're not even telling a good story, like even your story entering into the market has to be good, right? Because I said people are not going to take bets on a bad storyteller, right? And then finally, I think cultural nuance is very important. We see a lot of founders going into markets and they have teams, and even within the teams, the cultural nuance isn't really understood. If it's not understood internally, then how are you going to communicate that to customers, right? And so every market has its own nuances. So for example, South Africa, it's like they're very brand loyalty is something very important to them. So it's very difficult to break into the market, right? Um, but then again, like there's such a disparity between like the people on the high end of the spectrum and lower end of the spectrum. As I said, that the marketing is going to be very, very different to sort of both um ends of the spectrum. Or for example, in Kenya, there's like a very interesting mix between traditional and modern. And so if you're doing marketing or storytelling, you have to think about that when you're sort of entering the market. So I think that's something that people don't think about enough, but it's something that should do. And that really influences storytelling as well, right? So it's something that's very, very, very important when you're really thinking about scaling to a new market. So I tried to rush through this really quickly to leave some time for question and answers. This is the guide I was talking about that we had and that we published in 2024. I'm definitely happy to share with the ONDI team and they can send it to everyone. And that's kind of it. So I don't know if anyone has any questions.
Thank you very much, Oyinkan. We'll move into question and answer session. I think you can see that the questions are already popping up. Kindly take them one after the other. Thank you.
Okay. How can African startups get noticed by global innovation ecosystems? I I think it goes back to storytelling, right? It goes back to storytelling, but it also goes back to networks. I think that there's so much noise now, and that you have to really think about what are the strategies that help me to stand out. And something that I think that African startups are not doing enough of is collaborating outside traditional ecosystems, right? So we do a lot of work in the creative space, and I'm always thinking, you know, there's just so much opportunity here for collaboration in that space, but like people are doing the same thing over and over and over again, right? And if you just look at like international marketing trends, what people are doing is brands that are so unlikely are pairing more and more together, right? I remember seeing something um between like a luggage company and a makeup company. Those two don't usually go together, right? But by the time they did the pairing and had they launched like a joint product, I can't remember what it was, it kind of sold out. So you have to really think outside the box. What are the industries that I can do some sort of advertising or marketing with that is different to what my competitors are doing? Um, Also, R&D is very important. I think that there's an opportunity for African startups to really partner with um people that are doing R&D internationally. There are a lot of like MBA students or a lot of PhDs that are doing, maybe not MBA, sorry, maybe a lot of PhDs that are doing research or R&D in particular fields, right? It might be interesting to see what the partnership in those kind of fields would look like, because then if papers are published or articles are written, then it's like almost free promo for you. So you need to really just think outside the box. That's what I'll say. When scaling, how should founders balance strategic partnerships versus equity financing? So I think that's really like an internal thing. I think that the most important thing is customers. I think people forget that like your product has to be good. I think this thing where we are all chasing raising and chasing money, it's good, but you need to focus on your product, right? And that's where strategic partnerships come in. If you're focused on your product and you have really good strategic partnerships, it'll grow, and then it's easier. Then you have a better push when it comes to like equity, on like when you're asking for investment and when you're trying to negotiate equity. So for me, I think product always comes first, and you should really focus on your product. Too many people are focusing on raising as opposed to focusing on product and understanding the customer. So that's what I would say. Focus on your on products and strategic partnership, and then financing comes after. Let me see. What do DFIs look for when evaluating African startups? Traction. Um, but I think so. DFI programs are usually very big, and they don't usually invest in like one startup. Like, so for example, if you look at like BII, which is the British investment sort of arm, they do like check sizes of 10 million and above, right? And if very few Nigerian startups can actually absorb that amount, apart from like the really big ones, right? And so you have to really think about how do you get on their radar? Is it like by being part of like a program from like a smaller fund, or being in an accelerator program that they are funding? There's a program now that GIZ is doing that is funding around something around like, I think it's match funding, or I'll find it and I'll let you know. Right. But the investment body sort of sub grants like a small amount to like an organization for a program, and then when you do well in that program, then they can fund you to a bigger amount. So I think those are things that people should sort of be looking at. I know GIZ has a couple of those. GIZ is like the German version of FCDO. FCDO, we don't really fund startups directly. We what we do is we have programs like sort of like Manufacturing Africa. So under Manufacturing Africa, if you're manufacturing anything and you're trying to raise capital, that program supports you to raise capital, right? So things like that. But we won't give cash. So every DFI is different. It really depends on who you're targeting. What are the main barriers to cross-border expansion, and how can partnerships help? I think the main barrier is that there's just so much regulation. Like every country is different, and if you're trying to go to Kenya is different from trying to get into Ghana, right? And the cost of mistakes is sort of the main barrier. But I think partnerships can help in that. Again, there are people that have gone before you that have tried and have failed, right? They can literally tell you this is what you should do and this is what you should not do. I remember, and this is an example from outside the industry, right? Someone said they did a fashion pop-up in Ghana and they took like red things. And they were like, why are the red things not selling? And people were like, in Ghana, people don't like wearing red because red is for like funerals or something. I can't remember what the thing was. So that kind of nuance you can only get from someone that has tried it and failed before. So when I say partnership, it doesn't have to be a big thing. It could be like finding a like an organization that has scaled into a particular market that you're interested in, and finding someone within that organization to do a masterclass for you or something like that, right? But in return, you also have to give them something. I think people have to remember that it's a business. It's not friendship. So what are you offering in return, right? That is sort of my thing to that. Let me see. What other questions? I don't know how much time I have left. Shade, I don't know how many questions can I take?
I think you can take one or two more.
Okay. So how can startup founders leverage UK Nigeria tech hub to get partnership with organizations across Kenya and South Africa? I think reach out to us. What we can do is we can put you in touch with our counterparts um in the other hubs, but it has to be a direct ask, and it has to be a very do you get? I want to see if I can reach ABC company. Like it can't just be like a random or introduce me to 5 investors in ecosystem. It doesn't work like that, right? Because obviously it also depends on who the hub directors and hub managers know as well. But if there are particular people that you've gone on LinkedIn and you've seen that maybe the hub manager or the director has interacted with, why not? We can always like do an intro. So it has to be something that not that we can do, but not just a general inquiry, right? So send us an email. We're always happy to kind of support Nigerian founders. Let me see what other question. Yeah, I think I've answered those ones. How can ecosystems and policymakers align to make AfCFTA scaling easier? I don't know. It's policymakers that have to do that. I think that we're moving towards like implementation of a lot of the protocols, but with everything, legislation, it takes time. So I think like things like this help. I know that at the moment, ONDI is doing a lot around AfCFTA and supporting companies to go into other markets. I think there was a mission to Sierra Leone recently, I think. I don't want to say the wrong thing. But I think Shay can come in there. There's a mission to Sierra Leone recently, and I know there's a lot of work that India is doing around like helping African startups scale across West Africa. So those are the programs that I think that people should really tap into, but also engage your policymakers and ask them, how far, right? Do people know who is in charge of implementing AfCFTA in Nigeria? You need to engage your policymakers so that they can make the move quicker for you guys. So yeah, I think that's kind of it. I really hope that I could be helpful. I think Shay has my email, so please feel free to reach out and ask any questions. But I also think that the Tech Hub program manager, I think she's also on the call. Her name is Oyinda. You can also reach out to her. Yeah, she's on the call. You can also reach out to her. We're definitely always happy to like chat with you and like share some of our knowledge or our experience working across these markets. So thank you, everyone.
Thank you very much. Thank you very much. Thank you once again, Oyinkan. This was very helpful, information packed. I've been able to share your presentation with the attendees. They can also filter through it and circle back with other conversations they want to pick up from there. Now, our next speaker brings a venture capital perspective on what it takes to build and scale impactful technology companies across Africa. We are pleased to welcome Iyinoluwa Aboyeji, the founder and managing partner of Future Africa. Many of you may know him as a co-founder of Andela and Flutterwave, two companies that have played a major role in shaping African modern technology ecosystem. Now, through Future Africa, he now works closely with founders and investors, supporting mission-driven startups, building transformative businesses across the continent. In today's session, Iyin will share insights on how investors think about scaling Africa focused on digital businesses, including cross-border expansion, capital structuring, and what it takes for startups to scale successfully across multiple African markets. Iyin, we are delighted to have you with us. Over to you, Iyin.
Thank you. Thank you very much, Shay. I hope everybody can hear me. Thank you for affording me the opportunity to speak at this webinar. Very excited. I see that there are lots of companies here that are looking at taking advantage of the Africa Continental Free Trade Agreement and looking to expand their business. I think it's a fantastic idea. In this next 15 minutes, what I would love to do before I start to take questions, which is the crux of the matter, is really just walk you through the investor view of Pan-African expansion and how to generally think about it from a very practical implementation perspective, structuring perspective. So the first thing I would like to share is that, generally speaking, when you look at capital sources, particularly venture capital, one of the things that we're particularly obsessed with as venture capitalists is scale. We're always asking, can this thing scale across borders? Even though, if you ask me, I think Nigeria is a very big market. People always raise this matter of scale, particularly from the view of diversification. And that's why you would see that there are 4 key markets in Africa that you will find a lot of VCs are spending time and investing a lot of money: Nigeria, Kenya, Egypt, and South Africa. And it's precisely because of this question of scale and diversification. And what you will notice about many companies, including many of the ones that I had the pleasure of co-founding, like Andela and Flutterwave, is that many of these people would actually invest in Nigeria. Maybe they start off in Nigeria, then they scale to Kenya, then they scale to Egypt or South Africa, and then pick up a few other countries along the way. But usually scaling into these 4 poles is really, really critical to an investment proposition, as we've seen. The challenge is that what I've learned the hard way with this model of scaling is that many of our markets are many markets within a market. I'll repeat that again because it sounds like a riddle. Market in a market. So, for example, there are parts of Lagos that function like Cape Town or Johannesburg. They are similar markets. There are parts of the north that are perhaps more like Uganda or rural Kenya or rural Egypt, right? So one of the biggest mistakes a lot of startups think about expansion purely from a geographic standpoint. And what I used to advise, I used to say, look, when you're thinking about would expand to, think about it not just from a geographic standpoint. Oh, I'm going to Kenya, South Africa, Egypt, or whatever. Think about it also from a psychographic. The psychographic standpoint is, okay, who are you targeting in those countries that has a similar thought pattern to the customer in Nigeria, perhaps, that inspired your products? So, for example, when you look at marriage in the north and you look at certain marriage practices in parts of Egypt, you will find that there's a lot of similarities. And so if you have a product that works for married women in the north, that product more or less is likely to work for married women in Egypt or certain populations within Kenya as well. I don't know so much about South Africa, but you would find that is a practical concern. It's a practical matter. I always encourage companies that, not enough to take it from a demographic standpoint to say, okay, or even a geographic standpoint. I'm looking for young people in South Africa or young people in Egypt. Also think about what are the thought patterns for people that buy your products and where else. And you'll find that might actually lead you to a more global approach. And then you can use your African markets as validation. I will end with a story on that point. I mean, thinking about Move's expansion. So one of the companies I was a founding investor of a company called Move, Moove. When I was thinking about Move's expansion, one of our thought processes was, okay, what other markets do have the same structural problem as Nigeria, in the sense that you have drivers who cannot afford cars. They don't have the credit to afford cars. In the US, anybody with even half a credit rating can lease a car, use the car for Uber, return the car at the end of the day. But in many of our African countries and even around the world, if you're an immigrant, you don't even have access to those things. And then even worse, if in some countries that even nobody has that access at all. So we thought about, okay, how do we take this model and then apply it more Pan-African? And that led us to Cape Town. We have a lot of South African immigrants where, some ex-African immigrants that are driving taxis to make body and soul meet. And we can give them cars, we can give them access to a credit system because typically they won't have one. And all of this starts to add up in a significant way for them. So these are very interesting models for what is possible in that respect. I wanted to also share other thoughts. Yeah. So, as we think through the funding mechanisms, right? I think it's really important to identify investors that have some local context, even as you identify global investors that like broad base. So before you go into a country, you need to look at, okay, which investor invests in my sector within that country, and how might I be able to link up with them or partner with them or work with them so I can get to an outcome. Because when you go into a country, there's so much that is unspoken or unsaid. And if you don't have local VC relationships in that country, that does not tend to work in your favor. You will run into big trouble, and there'll be nobody who can speak the local language to free you from that trouble. This is something I learned the hard way with a few deals we did, where we didn't do those deals with local VCs. And at the end of the day, we ended up in trouble. And I've also had the reverse happen, where I was the local VC for other funds, and I was able to better navigate the circumstances. So I think it's really important that you think, if you're thinking about expanding, you're thinking about also looking for VCs in that country that can also support you, even if you don't need the money, but the contacts and the network and the understanding of how things work in that country is extremely important. The third point that I wanted to quickly raise on this matter is really how you structure. So a lot of us are quite careless when it comes to the way we structure our deals, quite frankly. And what do I mean by that? A lot of us, we like, okay, some US investor wants to invest, so they've asked us to create a Delaware entity. That is all fine and good. But by the time you have, 15 direct subsidiaries under your Delaware entity, you're going to start to bring up some issues on the US side, because one of the things the US does is that the US allows you to claim the taxes you pay in country against your income, right? Against your income tax. However, one of the things that creates, it also creates a withholding liability as well. So if you don't properly structure, I'm not a lawyer, so I want you to go and talk to a proper lawyer about this. But you may end up with liabilities that, you may end up with like a 45% tax burden, such that and again, you're not eligible for 83B because you don't pay taxes in the US. So you might end up in a very ugly spot if you don't really take your tax planning seriously. What we try to advise people to do is now to, go through the UK, a UK blocker company, right? Or even use the free zone in Itono as an example of something you can do. These tend to minimize your tax disadvantage on account of you taking funding from the US. So as you expand, manage your tax exposure very, very carefully. There's so many great fortunes that have just been eroded by what they committed on taxes. And now they're just sitting on that. And it's it's not a pretty sight. So think about that. Then finally, I would say, something else that I think a lot of you need to be thinking about, and I would now leave 10 minutes for questions and answer, is really thinking about your team. A lot of us, we want to import people into countries. And the reality of the matter is that you cannot conquer Africa as a Nigerian company. You can only do it as a Pan-African or a global company, because there's so much you don't really understand or see as a Nigerian, and talent is not enough. You need personal relationships, you need the ability to speak local language, all those things. So you need to look for team members that either have the ability or experience in those countries, or look for people in those countries that can work with you at the highest level. Because otherwise, you end up wasting a lot of your money. And that's not what you want to do. You want to be able to flourish. So these are very, very important points. I just thought I would share them. And then perhaps the last 10 minutes that we have, we can use for Q&A. Thank you very much.
Thank you very much, Iyin, for that insightful perspective. You shared important reflections on how investors evaluate growth opportunities across African markets and what founders should be thinking about when preparing their business for scale. Now, we'll open the floor for a 10-minute Q&A session. Reminder, you can still submit your question via the Slido link in the Teams chat or through the attendee WhatsApp group. Our team will continue to monitor both channels and bring your questions into the discussion. Now, let's take a few questions. Iyin, you can just look at the screen, displayed screen. You see questions there. You can start.
Yes, I can see them. Okay.
Yes.
How do investors evaluate startups that want to scale across multiple African markets versus those focused on a single country? Well, I mean, at the end of the day, the evaluation metric is still growth, right? So if you focus on a simple country and you're growing at the same rate as somebody who focuses on multiple countries, it really doesn't matter to investors because all they are really looking for is growth. So it's a different challenge, right? Because you almost have to build it from scratch yourself and then teach people how to think about scale while remaining close to the business. I wasn't able to do that with Apex, but my partner's got a pretty penny. But yes, I mean it's just helpful for you to be thinking about that. Now, second question, from a VC perspective, what are the key capital structures that make digital businesses attractive for investment? So I think the Delaware thing used to be a thing, but I would argue now it's waning. What people really care about are tax efficient structures. For example, if you domicile in, they want to make sure you're not giving up most of the value of your company in the event of an exit to paying taxes in multiple different places. So you ultimately want to look for a blocker or an African parent in a country that has free trade zones with your major markets, free trade agreements with your major markets. So both, so this is basically how it is. What common mistakes do founders make when preparing for cross-border expansion, and how can they avoid them? I think the biggest issue people do is they don't take the people side as seriously. They think they can run the business from Nigeria, and that they often run into problems. Starting a business in another country is almost starting a brand new business. So you have to take it that serious. Does that make sense? Okay. How should startups balance rapid growth and sustainable operations when scaling across the continent? I think there are many ways to balance it. One of those things is to think psychographically, meaning that if you do that, you're not under a lot of pressure, unlike those who, because you'll be able to scale rapidly within a set demographic or thinking pattern. So very, very important. Are there currently sectors or business models that resonate currently? There are quite a number. I mean, I think that healthcare, for example, is one very big one that could be very big, and education going out as well could be very big, right? Could be much bigger than it used to be. What else? Yeah, I'm very careful, So let me go. For early stage startups aiming for continental scale, what metrics or signals should they prioritize to attract VC interest? Well, I think you need to prove out your unit economics first and show how, as it goes from country to country, even if it changes, it doesn't put you underwater. It's very, very interesting, very, very important conversation. How do VCs approach risk management in markets, risk assessment in markets with different regulatory frameworks across Africa? To be honest, we manage it by limiting our check size. You understand? So if it turns out that a country has good mandates, we manage our check size. We can quickly see them get to scale, and then we can support them. But Okay, what role do partnerships, strategic alliances, or co-investments play in making Pan-African expansion viable for investors? I mean, these are very important because I think a lot of things are built on platforms. So you kind of have to work very closely with partnerships or partnership organizations. AfCFTA itself is one of them. UNDP is there to look into finding some local shareholders where you can. What role do, I'm sorry, how can founders position their company stories to appeal to local and institutional investors, international investors, and seriously? Well, at the end of the day, yeah, investors are investors. If you can show them how they're making money, your story will appeal, whether they are local or international. It's just the international ones might be more willing to give you cheaper capital overall, but it's basically the same. Next, what lessons from Mandela and Flutterwave are most applicable to startups today looking to scale continent-wide? I would say, maybe maybe a few lessons. One lesson is think global. I think Move learned that lesson very well. You can be from Africa. You don't need to be in Africa to be an African startup. So scale globally. I think Andela had some really good opportunities in the African American community at that time, and we didn't take advantage of it. So I would say the biggest advice is to do that. Yeah. Thank you very much.
Thank you very much, Iyin. Thank you to everyone for sharing their, such thoughtful questions, and thank you for making our time for this. Thank you. Now we'll move on to our final speaker today. We'll move from investment perspective and ecosystem connections to real world case. Studying of how to scale high growth African fintech. We're pleased to welcome Kanyinsola Adepoju. She's a lead investor relations at Flutterwave. Flutterwave is one of Africa's most recognized fintech companies operating across multiple markets and enabling payment infrastructures that powers businesses across the continent. In her role, Kanyinsola worked closely with investors, partners, and stakeholders, helping position Flutterwave for continued growth and expansion. Today, she will share practical lessons from Flutterwave's journey, particularly around structuring capital for Pan-African scale and navigating the realities of building business across multiple markets. Kanyinsola, we're glad to have you with us. The floor is yours.
Thank you so much, Shay. Good morning, good afternoon to everyone. Because of bandwidth, I would stay off camera, but nice to be a part of this. Thank you to the group for the invite to Flutterwave. Excited to share our story, our journey, and hopefully connect with the cohort today. So I will be sharing my screen shortly. Just by way of introduction, as Shay mentioned, my name is Coin and I manage investor relations at Flutterwave. Flutterwave, as you may know, Flutterwave is a payment technology company and we provide financial services to fintechs from large enterprises to small businesses. And we also have a remittance solutions, an app that allows people to send money from diaspora into the continent and so on. So I'm just trying to share my screen. Give me 1 second. All right, just confirming that you can see my screen, okay? Could someone please confirm?
Yes, we can see your screen and your voice is way louder now. Let's keep it at that tempo. Thank you.
Awesome, perfect. Okay, again, thank you all again. Please feel free to drop your questions into the Slido. I would want to make this more interactive. But again, I'm here to talk about a case study or Flutterwave specifically, how we've been able to scale across border and just looking at it from our own perspective. If you have any questions, please feel free to share that. So, what was the thesis for Flutterwave? Flutterwave came at a point where we saw a pain point in the continent, which is the interoperability of payments. So think of a business in Nigeria that is looking to scale into Ghana, or looking to scale into Kenya, or looking to scale into South Africa, like my previous presenters have shared. The drawback here is that these countries have different currencies, different regulators, and it was difficult for businesses to do this because they had to go through hoops. Sending money from Nigeria to Ghana would take 7 days sometimes, even though you could take a 1.5 hour flight to Ghana, right? So essentially, there was no interoperability between the countries that we have on the continent. Flutterwave's thesis was we can make one single API that would do, or that would connect all the countries on the continent, all the payment methods on the continent into one. And we can offer that as a solution. So right on the screen, you can see that only 12% of only 12% of inter-African trade exists, or at the time where we were there, we had more than 40 currencies on the continent. There's over 500 banks, 500 wallet systems. Think about mobile money wallet system in Kenya, in Tanzania, in Ghana. Also to call out that even though these wallets exist, they're not even connected to each other as well. So that means that foreign exchange friction was very high across the continent. So this was an opportunity for Flutterwave to plug into the ecosystem and make payments seamless across the continent. So what did we do? One of the main things that we saw early on, that it wasn't just about creating the software, it was about finding the capital to be able to build our success story. So with most companies today, as you're aware, you start off looking for seed funding, funding from family and friends, funding from accelerators, from government programs, and so on and so forth. What these group of people would mostly be looking at is proof of concept, right? You want to be able to show, or we were able to show, that we're building one Africa. We're looking to synthesize all the payment options in Africa to be able to, you know, bring the African economy to the global world. And as to what my previous speakers had mentioned, they already alluded that you should not limit yourself to the geographical region where you're in. So our goal was, so far, Africans have been going one market and just staying locally, but we're able to help you think global. So thinking globally while you remain local, right? And that was one thing that Flutterwave did. So through our seed to our Series A, that was the thesis, and making sure that we were building a solid foundation, a viable product that banks, that clients, for example, our marquee client, Uber, was able to see a value in. Now, by the time we got to Series B and beyond, we wanted to move from being a software provider, being a solution provider, into a scalable business. So what that meant was that we had to go into new markets, get new licenses, get the required approvals to be able to continue to build trust for our existing clientele. So, for example, Uber is one of our biggest clients today. Uber started with Flutterwave in Nigeria, and we were able to help Uber scale across Africa and even outside of Africa. The way we were able to do this was we were able to co-work with Uber, going to central banks across markets, central banks across different regions, to be able to say, hey, here is a well-established global company that wants to bring their business into Africa. It's a good use case for Africans to be able to leverage a success company like this. And with that, we were able to expand, we were able to get additional funding. So one of the main things, or another thing that we were able to get from this was institutional dominance. Now, as we started to scale our business, we realized that the best way to draw value for the investments we got was invest in twofold. One, grow high volume markets, and two was to get regulatory coverage or licenses, right? So now in most markets, or as we might be familiar with today, one of the biggest market or some of the biggest markets, as my previous presenters have also mentioned, Nigeria, Kenya, South Africa, Egypt, right? One of the things that we realized where we needed to have anchor markets across the continent to be able to prove our thesis, to be able to show our investors, and also to be able to show our clientele of what our market reach was. So while we were doing that, while we were investing in those markets, we were also securing licenses in other markets that would serve as secondary. So in that case, what we did was we would have primary markets. So those would be Nigeria, Ghana, Kenya, Egypt, South Africa, and then we would have secondary markets that would complement these primary markets. So as you think about your business, it would be good for you to identify what your primary would be and what your secondary would be, because as you're even having conversations with potential investors, this will play a huge part in how you're able to position your business and how you're able to position your skill to the investors. Now, in terms of navigating the investor ecosystem, we've been able to, or we've been lucky enough to interact with various investor types, from VCs to DFIs to strategics, right? And what we realized at the earlier stage was VC funding is quick, right? And I think if you speak with a number of people, they would be able to allude to that same notion as well. VCs would give you quick capital. They are willing to take more risk, and they are able to help you go to market quicker, essentially. What they expect, though, and some of my previous presenters have mentioned it, is that they are focused on growth. They want you to be able to triple or double whatever value or valuation that they are able to give you. Luckily for Flutterwave, we've been able to position ourselves and we've been able to get the support of our investors, such that investors that we have investors on our cap table that invested from Series A all the way to our Series D round. One, we've been able to deliver value to them. Two, the thesis is still strong in terms of the solution we're providing, in terms of the problem that we're solving in the ecosystem. The second group will be DFIs. DFIs to DFIs specifically care about stability, right? They want to be sure that you can provide value to the ecosystem, right? They want to be sure that you are supporting more macro goals, right? They're also able to help, for the most part, advice in terms of your structure, in terms of your compliance, in terms of your governance. To what Oyinkan had shared earlier, they're also able to help support in terms of grants, in terms of access to rooms that you would need to position your business in. So we've been able to see a lot of this, and I'm able to validate a lot of this as it relates to our business. Now, the third category is strategics. Oyinkan and E have also mentioned that partnership is important. Having strategic investors is also important, because not only are you able to get the venture part, which is the investment or financial investment, if that happens, but they're also able to support you commercially. So, for example, when we did one of our fundraisers, we had WorldPay participate in a strategic partnership, right? So, WorldPay had a ventures, or they have a ventures arm, and they invested in the company. But then we also have a commercial partnership with WorldPay where we are their partner in Africa. So, their own clientele, right, from the US, from Europe, Asia that are looking to do business in Africa through that commercial partnership, they're able to build on Flutterwave infrastructure, introduce those clients to us, and those clients are able to use Flutterwave for their own services. One thing that we also achieved on the flip side is that our own customers that are looking to go global, right, leveraging the WorldPay infrastructure and their own integration, we're able to support our existing merchant base as well. So what they expect is that for strategic investors, they want to be sure that there is that product fit between your own company and their own company, and to be able to have more of a market share essentially. So it affords the opportunity for both sides to expand their market share. So, just to quote here, successful scaling requires a balanced diet. While VCs want velocity and they're quick, DFIs would help you gain access into key regulatory areas, and strategics would help you provide real and liquidity. Now, what is a almost like a drawback that I wanted to share with the group today? One of the things that we found earlier on was that we believed that just having a solid product was all we needed to grow or to scale. What we realized was that each market is different. So the local nuances, to what Oyinkan mentioned, cultural nuances, for example, in Ghana, and how they are not favorable to the red color, right? Cultural nuances, country nuances played a huge part in how we were able to scale. So it wasn't just about saying that, hey, this is this new shiny company, Flutterwave, that is building this amazing product. We needed to go into each market, having boots on the ground to be able to understand that how does payment work in this market? What do we need to adapt? About our business to ensure that we are successful in Ghana, in Kenya, in South Africa, right? So that was one lesson that we learned. So what we were able to do to solve this is that we were able to go through our bank partners to enter into some of these markets while we built the regulatory relationship with the respective central banks that were in that market. So as opposed to thinking about, what, first to market, first to market, first to market, yes, first to market is a good approach, but you also want to be sure that you are building correctly, you are building the right relationships, you are building the right products to fit the specific market or the specific area that you are in. So I'm just trying to share my next screen. So can you still see my screen?
Hi, Kanyinsola.
Apologies, I lost my screenshot. Please, I'm just trying to reshare again. Okay, thank you. I hope you can see my screen again. So the next step that I wanted to just highlight real quick is on how we were able to build our blueprints for the deals that we've done and the investments that we've done. First of all, the most important thing that we wanted to do was we wanted to build our operational excellence, right? We wanted to set ourselves up to ensure that the services and the solutions that we were building, right, was top of the line. We wanted to build a product that worked, that had real life impact, that had a solution for all the customers or the markets in which we were operating in. After that, we wanted to make sure that the standards and the governance that we have in place, or that we had in place and we started to build, were of world-class standard. Because having this standard meant that you're able to pitch to the right investors, to the right stakeholders, to the right groups. Because when you're and depending on the group of investors that you want to target, whether that is DFIs or VCs, there are key things that they are looking for. So, for example, at an early stage business, the investor probably just wants proof of concept, right? They want to see that you have customers, they want to see that you have volumes. But when you're looking at a DFI or a bank, what they are looking for is that what does your governance structure look like? Is it world class, right? So all of this played a huge part into how we built the business, right? We made a lot of investments in risk and compliance. We made investments in having a world-class team. We made investments in making sure that the systems, the security that we have in place, the people, the partners that we have, we made sure that we invested in even in the training of employees, right? Making sure that we had advisors in the local markets that would be able to help us educate on, help us get into the rooms with regulators to have conversations, sitting at committees, right? We were able to leverage all of this to build a strong standard and governance structure for Flutterwave. The next thing that we were able to do was to build trust. And that trust partly came from the solid product that we have, as well as our clientele. Because once you have a good product, your customers will be your biggest selling point. They would be able to refer you to, other customers. They would be able to they will be able to help market your product as well. So that trust, institutional trust, is something that we were able to build as a business. The next thing that we had was skill, right? We started out in Nigeria, and then we were able to quickly move across West Africa. And from there, we were able to move to Southern Africa, to Eastern Africa, and then we went global. So the product that we had and the business we were able to grow helped us to scale quickly, primarily because of our customers and also because of the investments that we got helped us to scale into new markets. So as you're thinking about your business and thinking about the long run for your business, it's important to um, think through these pillars, right, on how you're going to be able to define what your value add to the ecosystem, to yourself, to the investors would be. So I just put together a bit of a checklist for skill, right? And how we were able to build our own business. So first of all, we made sure that we were not just building for liquidity. We're not just building for the tech, we're also building for the value, right? While investors would fund the idea or fund the problem we're looking to solve, it wasn't just about the code, right? Flutterwave started with one line of code, but it wasn't just that code that investors saw. They saw the problem that we were looking to solve, and that was what made them invest in the company. Now, the other thing is that regulatory arbitrage being a myth. What you want to do with regulation is that any regulator that you come in contact with, they want to be sure that you have the process on lockdown. They want to be sure that you have policies in place. They want to be sure that you have a structure in place. They want to be sure that you have your compliance in place, especially if you're building a financial product. So it's very important to have this set up when you start a business. The other thing that that we have or that we were able to do was that we have a good mix of our capital. Thankfully, we've been able to raise up to a Series D round, and for each level of the fundraise we've had, we have had a different group of investors. We started with LPs, we started with smaller angel investors, and then we grew to institutional investors, to VCs, and we were able to get strategics. What this healthy mix of investors gives to Flutterwave is that at any point of our business, any stage of our business, we're able to leverage this mix of investors for what we need at the company, whether that is commercial, whether that is regulatory, whether that is just the network, right? This mix of investors help us provide or are able to give us valuable long-term stability. Now, the other thing is that as we've grown, we've been able to adapt our business, right? So when we started, it was just a small company back in 2016, only one major client, Uber, and that was the thesis for our seed round. That was the thesis for our Series A round. But as we've grown the business, as we grow the business from Series A, Series B, Series D, the why of why we were raising money changed. So it became a case of, we've been able to do proof of concepts. We've been able to hit $1 million in monthly revenue. We've been able to hit 500K in volumes processed, and now the need for each fund round changed. So for example, when we were raising our Series B, Series D, the focus was building out our infrastructure, building out our security, and getting licenses. So for every stage of investments that you do, it's very important to know or to identify the why investors should invest in your business. And then the last thing was local context, global standards. I think I mentioned this already. So although you might be operating or your primary markets might be in Nigeria or in Ghana or in Kenya, you have to think globally. You have to make sure that the standard of what you are delivering is global. And that's one thing that we've been able to do at Flutterwave, right? So although we are a global company, all of our operations, we've made sure that they are localized, whether that's in terms of team, whether that's in terms of governance processes, whether that's in terms of relationship, or even down to the website, right? Making sure that it's localized to the specific market in which we have those operations in. So just again, I can just run through this. I'm not sure how much time I have left, but like I mentioned earlier, we were solving for liquidity, not just tax. We're making sure that we were building a strong compliance, a strong infrastructure, a strong product for our for our investors, we had a good mix of our capital, making sure that as our investors, as we were growing our business, the mix of our investors was also evolving as the business was scaling. So I'll just stop here. Thank you very much. I'm happy to take questions.
Thank you very much, Oyinkan. Thank you very much, Kanyinsola, for sharing those insights from practical lessons. We'll now take our final 10-minute question and answer session. If you have some questions, please remember to drop those questions in your Slido link shared in the Teams chat or in the attendee WhatsApp group. We'll try to take as much questions as possible. Over to you, Kanyinsola.
Thank you. I see. What is the best way to build a startup from experience? Focus on one use case with tightly built features or design for flexibility to test other use cases later. I think it's important to start with one use case, but it's also good to highlight what that use case could evolve into. So that might be like a solution, but one use case that we had at Flutterwave was we wanted to simplify payment systems, right? Anyone thinking about that would be like, oh, you know what? I just want a business to be able to pay their customers or get a vendor in another country, and I don't have to wait 10 days for it. But something else we're able to see is that we were able to help with FX. We were able to help individuals as well. So while our main thesis was just interoperability, we saw different use cases on the consumer side. So having an overarching goal, I think, is important, but being able to identify where that could diversify to is also important. What are key considerations when structuring capital for expansion into multiple African markets? This is a great question. You want to be sure that the capital usage can apply to multiple things, right? So what that means is that if you want to develop infrastructure, or you want to invest in your infrastructure, in your security, in your policies, right? If you can knock out 2, 3 markets using the same solution to stretch, quote unquote, to stretch that dollar, right? That would be the best option to save your runway, to save your cash. How did Flutterwave decide between different financing of options? Right now, one of the things that we took advantage of was our existing investors, right? We have a close relationship with all of our investors, and one of the things that we explored was leveraging them to connect us with new investors. So we would speak with investor A to say, hey, this is what we're doing at the company today. This is how we're thinking about the business. This is what our strategy is like. And working with those investors, leveraging their own networks, we're able to identify or determine what our next bucket of financing would look like. What would you recommend as for a startup in the beta testing phase, considering how to launch, grow, and scale? Partnerships, VCs, or angel investors? For a startup that is in beta phase, I know there's a lot of incubators and accelerators around. So I would say that working with these groups of people would be a good way to start, because as a startup, you don't want to expand capital too much. You want to conserve as much capital as you want, because one thing that we've realized is if you go to market too quickly, and as you know, Flutterwave has also done some investments in other fintechs. So for example, we just did an acquisition with Mono. And we also have partnerships with other financial services companies across various markets. One thing that we've seen, or one thing that we've come across for some startups, is that they have gone to market too quickly and they're giving up too much control of their business. So as a founder, as a startup, you want to be able to preserve the integrity of your business. You want to be able to preserve the say that you can have in how your business grows. Because once you have capital and once you start to have investors, you have to listen to them, right? Almost like I'm giving you capital, and here's how I think you should drive the business. So at the early stage, when you're still in beta testing phase, you want to preserve the integrity of your idea, right, of your technology. Um, how do you balance expectations with operational realities when scaling Pan-African? Um, Investors, as I mentioned earlier, VC investors, DFI, strategics, they all have why they are investing in you. So it's a very sensitive um, situation when you have to balance the wants and expectations of all these people. But it all comes down to stakeholder management, right? You know what each group wants, right? You know what each group wants. So you have to find that as a founder, right? Business owner or someone that's running investor relations, you have to find that balance or that mix within your business to cater to what they want while still holding to your problem statements, right? Are there specific metrics or milestones investors focus on for fintechs expanding? Yes and no. At the early stage, what anyone will be looking at is, are you growing, right? Are you solving a problem? But then as you continue to scale, what they are looking for is that, what governance do you have in place? Are you doing things right? Do you have the right team? Do you have the right licenses? Do you have the things to do what you are saying you're doing? So I say at early stage, you can pretty much get away with most things because they're like, oh, you're growing, you're growing, you're growing, you want to move fast. But once you get to a certain stage, they're looking for structure, they're looking for stability. What lessons from Flutterwave's expansion can you apply to early stage startups? I think network is important. You always want to make sure that you're building those relationships. Email founders, email business owners, email DFIs, right? Attend webinars, attend meetings, attend events, right? I think that's really important. How do you structure relationships to sustain sustainable growth? I think I mentioned something similar to this, knowing what each of them expect, right? And whether that's your reporting or your communications to them to ensure that, again, stakeholder management, you are balancing what that relationship is. What mistakes should founders avoid when cross-border financing? I'm not sure what you mean by cross-border fundraising, but I think this might be more of a legal question, making sure that your company is registered properly, because when they do due diligence, they want to know where the funds are going into. Some investors are able to fund you locally, while some will say, no, you need to have an entity in a specific place. So I would say working with the legal advisor for that is very important. How do you manage risk and compliance? Again, relationships, risk and compliance, working with banks who have been doing this for decades, right? Leveraging their knowledge, talking to regulators, engaging with the central banks of where you're at, attending stakeholder meetings, right? It's really important, and it helps to inform how you structure your own business. That way you're avoiding mistakes and you're avoiding hard lessons, right? Strategic partnerships have been really beneficial to Flutterwave. Like I mentioned, WorldPay is a partner. We just partnered with Polygon. We're launching stable coins at Flutterwave for 2026. As our next step, we'll have partnerships with banks. All of this play a huge part in our business. So depending on what your needs are, I would say find the names of the partners that you want and just go for it. That has helped us a lot, right? And we've not been shy. The worst they can say is no, right? The worst they can say is no. So shoot for the skies. What would you recommend for startups in beta phase? Okay, I think I already answered that. How can a startup navigate compliance hurdles across new markets? Leverage already existing players. Existing players already have a playbook. So leverage what they have. If you're going to do due diligence, if they're doing due diligence on you, look at what they're asking and use that as a playbook for how you want your own compliance to run. So there's nothing new under the sun, for lack of, if I can use that phrase. So the players that are already doing this. So even as Flutterwave is doing one API in Africa and in emerging markets, there are other players out there that we are also looking at to say, oh, this business is similar to ours. Here's how they're doing it. What part of what they're doing can we implement into our own systems, and can we also use? Thank you so much, everyone.
Thank you very much, Kanyinsola. This has been very, very insightful. As we wrap up today's session, I would like once again to thank our speakers for sharing such valuable insights. Thank all of you for joining the conversation and contributing thoughtful questions. Today's discussion reinforced something very important. Scaling across Africa is no longer just an idea, it is becoming a strategic reality for ambitious founders. But achieving that scale requires one, the right capital strategy, two, strong ecosystem partnership, three, practical execution across markets. We hope the insights shared today will help founders, investors, and ecosystem leaders better understand how to build and scale businesses that take full advantage of the opportunities under AfCFTA. On behalf of the organizing team, I would also like to extend our sincere appreciation to organizations supporting this initiative. The AfCFTA Go Global webinar series is powered by our partners, eTransact PLC, Chams Holding PLC, executing partner Sweet Fusion. We thank them for their support. Their support helps make this important conversation possible. And finally, a special thank you to our speakers today, Iyinoluwa, Aboyeji, Oyinkan Bello, Kanyinsola Adepoju, for sharing their experience, knowledge, and perspective with the community. Thank you all once again for being part of today's session. We look forward to continue the conversation as we work towards to support African businesses scaling across the continent. Have a wonderful day, everybody.